So welcome everyone. I'm Ken Cerini, Managing Partner of Cerini Associates. I'm joined today by my partner, Matt Burke. We want to thank you for attending. For those of you who missed the first installment of our Audit Committee Bootcamp, which was last month, Roles and Responsibilities of the Audit Committee, it's available on our website and YouTube channel. Feel free to watch it, share with your audit committees and everything else. We developed this series because in working with some 300 nonprofit organizations, we've gotten to meet with many different audit committees, all of them having good intentions, but varying levels of understanding and sophistication as to what their roles within the process are. So we figured if we could kind of increase the level of knowledge of audit committee members, it would go a long way in helping the organizations they serve. So that's really why we put this together. As we go through this presentation, if you have any questions, please ask them through the Q&A as opposed to through the chat. It's a lot easier for us to find the questions in the Q&A than it is in the chat. Christina will throw onto the chat the link to the presentation that we're going to be doing today. We'll also be sharing this after today. Before we get started, I'd like to really kind of ask a couple poll questions to kind of get a feel for, since we're not in person, I kind of like to do these things in person, but since we're not in person, instead of raising hands, maybe we can kind of answer some poll questions. So Christine, if you can throw the first poll question up. Okay, so what role do you play with respect to your organization? So are you an audit committee member, are you a board member, are you a staff member or other? It's just good for us to get an understanding of who we're talking to today. So if people can please just pop in your answer. Okay, so most of you, 53% are staff members. You have some board members and a couple of audit committee members and another. So good. This way, at least, like I said, we know. So for there being a lot of staff members, please share this information when we're done with the audit committees of your respective organizations. How does your organization handle the audit committee responsibilities? So do you have a separate audit committee? Does the board function as the audit committee? Is the audit committee combined with another committee, such as a finance committee? Or are you in a situation where maybe you don't have an audit committee? So again, just helps us to understand the organizations that we're dealing with today. So good 47% of you have an audit committee, and another 47% of you share the audit committee responsibilities with another committee like the finance committee. Okay, good. So it's good that most of you have some sort of separate committee that's kind of functioning in this capacity. So that's awesome. So you get to see us, but this is what we look like when we're when we have more hair and such. Anyway, if anybody has questions after the presentation, again, feel free to ask us. You have our contact information. So today's discussion is really going to focus on the external focus of the audit committee. Next meeting that we have next month is going to focus on the internal responsibilities. We'll talk about that a little bit more later on. As we discussed last month, the audit committee should be focused on risk and controls. That's really the main focus of an audit committee. Much of that deals with an internal focus of compliance, insurance controls, things like that. But then also a main component is really how the auditors deal with, how the audit committee deals with the external auditors. So that's really what we're going to focus on today. So we're going to be, how do you evaluate and choose your auditor? What does the RFP process look like? What should you be including in your RFP? What's your selection criteria? Every organization has a different selection criteria. So what things should you be considering in that selection process? Who's making the decision and how does that decision get made? When you're talking to your auditors and dealing with your auditors that have already been retained, the whole engagement letter review, what should be included in an engagement letter? What do the pre and post audit meetings look like and what you should be doing there? What should be included in what the auditors are presenting to you, and what other board interactions should there be with the external auditors? So we're going to try to cover that pretty quickly. So Matt?
Okay, so I'll take it away from here. The request for proposal, we call it RFP process for short. This is what really starts the ball rolling with getting new auditors or hiring auditors for the first time. So really what this is, it's the process by which information is shared with prospective bidders or auditors. Information is then gathered from those bidders. That information, those proposals are reviewed, they're scored, there's interviews that take place, there's questions that are asked back and forth, and ultimately a decision is made at the end of that RFP process. When is the RFP process needed? We have a poll here that we should throw up now so that we can see about this. So how often do you go out to bid? If you're aware, attendees every year, every couple of years, every 4 to 5 years, depends based on performance. And then of course the right answer is you use Cerini and Associates, so there's no need to change ever. But we'll see how this comes out. We have our own opinions on how often you should go out to bid. So it'll be curious to see how the rest of the world agrees or doesn't with us. Every 4 to 5 years. Okay. So you're more in line based on the results of this poll here with our line of thinking is that you shouldn't automatically go out to bid all too often. We've seen situations where we even have clients that go out to bid every year, just thinking it's best practice. But truthfully, it's probably a little bit much. And 2 to 3 years, maybe the minimum. We'd say the 4 to 5 years or based on performance is more reasonable. So let's talk through a few of those. Obviously, if there's a new audit, you'd have to go out to bid. Some organizations grow over the $750,000 revenue threshold in New York State, and then they'll suddenly need an audit where they didn't before. Then you would go through that RFP process for the first time. We see situations where nonprofits outgrow their auditors. So in that example of a small organization, maybe it balloons and it gets new contracts and new grants or new funding streams, or it repurposes what it does. And the outfit that it worked with before really isn't right for them anymore. So it makes sense then to go out to bid. Again, that's a performance-based trigger, not really just a timing one. Obviously, if there's any issues with your current auditor, you'd be frustrated and disgruntled and want to be going out to bid. We may see disagreements. Something we're seeing more and more of lately is lateness. We're seeing certain firms that maybe have gotten acquired by larger firms, they lose that personal touch. And there's a thicker review process and it takes longer. And we're definitely getting more RFPs now with very late dates on the audit reports, which means that things are dragging on a bit longer than the client, the nonprofit organization would like. If there's staff changes at the auditors and you're not happy with the new staff that's on your engagement, you might have to go out to bid then, because really you'll see in a later slide that your audit team is the key. You can be with the best and brightest firm in the world, but if you have a lazy partner with brand new staff, it's going to be a bad experience for you. So that's something to be considered when you're going through the RFP process. And obviously, if there's disrespect issues or anything like that, it's important that nonprofit organizations get the attention that they deserve and need. All too often, we see our competitors and peers act as auditors and really put up a wall and not be advocates and overly helpful to their clients, claiming they have to maintain independence at all times. So obviously, you do have to maintain independence as auditors, but you can still be very helpful. You can still interact in a friendly way. The friendly neighborhood auditors is what we like to call ourselves here and there at Cerini. It's just, it doesn't have to be adversarial at all, even though the word audit can have a negative and confrontational connotation. It really doesn't need to be that way. So there's different triggers, as you can see, for when you would need to go out to bid. There are just best practice reviews, and that's probably what that 4 to 5 year time frame is that was answered in the poll. 2 to 3 may be a little bit short, but every 4 or 5 years, just to check the pricing in the market, just to see what else is out there. The market, changes fairly slowly, in terms of public accounting. There are mergers and things like that happen, but chances are the same group of audit firms that you go out to bid for will be the same ones 4 or 5 years from now. You might want to see what's changed with them to see if they may be a better fit now than who you currently work with. How often should an RFP process be repeated? Kind of falls into the same line with what we just talked about, every few years, or if there's a triggering event that makes you want to go out to bid and look for somebody different. This last point is very important. How should it be timed for an upcoming audit? We get RFPs very late in the process as far as we're concerned. So right now we're getting through our calendar year ends, our 12/31 year end audit clients, and upcoming is another busy season for us, a June 30, 2021 year end bunch of or bulk of work that comes. We should be getting RFPs for those June 30 type clients now. After the fact really doesn't work. It puts everyone behind the ball. So if you're a June year end, for instance, you shouldn't be starting this RFP process in July, because by the time you hire somebody and get them in there, at the earliest you're looking at probably late August, September. And by then you're already behind the ball and you're rushing deadlines and things like that. You want to give the RFP process a couple of months start to finish, because it takes some time to get information to bidders, a couple of weeks. You want to give the bidders time to thoughtfully respond to the RFP, to put together a good, honest, solid proposal and have time to to ask you questions and for you to get to know them preliminarily. That takes a couple of weeks. You'll probably need a couple of weeks with your audit committee to wrangle everybody together, to try to make a decision, to score everybody, to interview the different bidders, and then a couple of weeks to maybe vote and get the word out to the winners that they won the proposal process. And even then, there's some legwork that has to be done by the new audit firm. They have to get an engagement letter out. They have to communicate with your prior auditors, which doesn't always happen so smoothly. So if you're really going out to bid and you're looking for new auditors, you should probably time it 2 to 3 months before your fiscal or calendar year end. This way you have enough time to really start the audit on time and not be perpetually behind the 8 ball right out of the gate. There's a question here: how do you know if you outgrow your auditor? A few of the examples that I gave, if things change with you at your organization, and if you feel like you're not getting the attention that you deserve from your audit firm, or if you feel like the answers that they're giving you really aren't connecting with the organization. Another example is if they're not really asking you smart questions, and if you feel like the audit isn't challenging enough, you might want to go out to bid too, because as much as you're hiring an auditor and it's ultimately their responsibility to have a quality audit, you don't want to be caught up with a firm that's doing subpar work. You don't want to be dealing with a rubber stamp firm, as we call them, that's really not performing a quality audit, because they're subjecting you to risk in case they ever get reviewed by their own peer reviewers and it turns out that they're deficient auditors. You don't want to have to deal with that yourself. So you want to make sure you're getting a thorough, honest audit, getting the attention you deserve, and that the audit firm that you're working with really understands your organization. And we'll get into that in later slides too.
So let's talk a little bit about the RFP process. There are certain things that should be included in the RFP. You should be providing a description of your organization, mission, value, program, so that the auditors get an understanding of what it is you do, how you run your business. I mean, the auditors are going to go to your website anyway if they're doing their job effectively. But again, you want to provide them with some basic information. Give them an idea of what your governance system looks like, maybe a structure of what your management and accounting function looks like, how many staff are in there, what does the organizational chart look like. All that helps to really gain an understanding of the controls. And the more information you provide, the more realistic the fee estimate can be that the auditors provide for you. What's your tax status? There's a lot of nonprofit organizations that may have affiliates that are for-profit affiliates. So again, a chart, an organizational chart that shows not just the internal staffing patterns, but maybe kind of a whole picture of what the organizational structure looks like. Do I have a management company with the other entities operating under the management company? Am I a small managing partner of a bunch of other affiliates? So how is that all laid out? What are your relevant funding sources? What agencies are funding you? Give a breakout of the different funding sources and how much funding you're getting from each, because each one of your funding sources is going to have its own unique way of providing ways that you generate your revenue. And you really want to make sure that the auditors have a good understanding of the different funding streams that are coming into your organization. What accounting, billing, compliance software do you use? Again, it'll help the audit firm to understand what their experience with that software is and be able to kind of answer questions. Any major events that have happened or changed. So what does your financial condition look like? Any changes in programs, new debt that was entered into? Leases, did you have an impact due to COVID, and what was that impact, and how did it, how does it interplaying with your overall operations? What sort of additional CARES Act funding did you get? PPP, HHS, ERTC, all of those. Give them a copy of your prior financial statements, any management letter you have, tax filings, cost reports. All that stuff is very, very helpful for the auditors. It's amazing how many times we get RFPs and the RFP comes in and none of that stuff is attached, and we have to then go back and either find it ourselves online or request copies of the information from the potential client. And all of that information, like I said, is going to be very, very essential. So if you get it to the auditors, potential auditors up front, all of that will decrease the amount of time it takes you to go through the process. If you have interim financial reports, a trial balance or something like that, if you're partway into the new year already, that'll help, because a lot of times, as Matt said, you're going to be asking for a bid before the year is over. So right now, if you're going out to bid for June 30th, if you send the auditors a copy of the June 30th, 2020 financial statements, here we are already 10 months later. So again, to have them with a situation where they have interim financials is good. What are your deliverables so that everybody knows? And it's, we've looked at an RFP, and we've gone through and we've called up the potential client and said, well, do you need a pension audit? Do you have a cost report? Do you need uniform guidance audits? By asking all of these questions, it kind of helps us to really identify what the deliverables are, but it'd be easier if that was kind of provided up front. What are your timelines? When are you looking for the RFP to be, or the proposal to be submitted? What are your timelines for the audit and deliverables within the audit? Again, it's important to understand because let's say that you're a December 31st year end, and you typically have the audit done in April or May, as opposed to having it done in February or March. An audit firm might be able to give you better pricing because that might be outside of their normal busy season. So they might be able to work with you a little on the pricing. So by having a good understanding of timelines and deadlines, that could help an audit firm to better define the pricing. Who should they reach out to if they have any questions? Again, we see a lot of times these RFPs come in and you have absolutely no idea, if you have questions, who you're supposed to reach out to. And to be honest with you, everybody who's responding to these should have questions, because it's really important to be able to have that interaction. And you want to have that interaction with the potential audit firm that you're going to be working with, because like anything else, it's an interview. And then what's the response format? What are you asking for? What information do you want to make sure that they're including within the proposal that they send you? So that if you're going to be rating them under some sort of rating system, you can actually compare all of the different organizations by having them respond to the same questions or providing the information in a certain format. It helps you really to gain a good ability to compare organizations, rather than leaving it up to each organization to decide what information they're going to send you. So again, I think the RFP needs to be a little more than a one-page letter. It needs to be kind of thought through, and information needs to be kind of pulled and provided. And I think if you do that, you're in a much better position in terms of being able to provide the auditors with the information they're going to need, and also be able to help them to ask good questions when they ultimately do speak to you, and also ensure that the pricing is appropriate pricing.
We'll be talking about how to source solicitations, so how to find the audit firms that you're sending out the RFPs to, and then identifying the point of contact within the organization. So we have another poll question that I'd like to place up now about the numbers of bidders that are usually chosen here: 3, 4 to 5, 6 to 8, or as many as I can. In the meantime, I see a question that's open from Deborah Milton. Can you recommend a good compliance software? If you want to reach out to us after this, we can help you with that. It depends on what you mean by compliance, if it's Medicaid or something different. We do work with software vendors that deal with nonprofits specifically, so I'm sure we can help. Just reach out to us after this. It's a bit off topic, but we can help you for sure. 3 audit firms, 4 to 5, 6 to 8. So 3 is the predominant answer there. I'm glad it's not as many as I can. I'm glad it's not 6 to 8. I say 3 to 5 is probably a good range. It is an arduous process for everybody involved. So on your side, whoever you identify as the point of contact, which we'll talk about, it's a CFO or controller, maybe even a member of the audit committee or board or finance committee. It's a lot of work. If you're sending this out to 6 or 8 or however many audit firms, you're going to get bothered by 6 to 8 or however many audit firms, and they're going to ask you the same questions over and over again. They're going to want to talk to you. They're going to want to meet with you. So each one's going to take probably an hour plus of your time. So you want to limit the pool slightly. You don't want to just have 1 or 2, because you want to keep your options open and really give other firms an honest shot at your account. So I think that 3, 5, something like that in that range makes sense, because it's manageable. There shouldn't be that many firms within your purview of what you're looking at that fall outside of that range. The way to identify potential firms is pretty easy, it seems. What we have typically is that board members have contacts, and you want to filter through their contacts and make sure that the accounting firms that they work with, whether in their private practices or private businesses, or they just know personally, you want to make sure they're nonprofit centric firms, because we're talking about nonprofit auditing here. Not all auditing is made the same. Not all CPA firms are the same. We, for instance, don't deal really at all with publicly traded SEC filing companies. So if we had an opportunity to bid on that, we would decline it. We don't work on that. Similarly, and conversely, really, there's firms that don't work at all with nonprofits, and they really shouldn't be bidding on your account, but they might. So you want to make sure that if you're getting recommendations from board members who are ultimate decision makers, that they're qualified audit firms for your specific type of organization. Aside from that, look on Google, look up your funding streams and auditor and CPA and see what comes up, because everyone's on the web now, everyone's on social media. All these firms are trying to show where they really specialize and spend most of their time. So reviewing websites, reading through websites, you can probably get a good sense of who really focuses on your type of organization versus who pretends to. If you see a website that says we do nonprofit, for-profit, construction, manufacturing, this and that, chances are it might be a canned website, or they're stretching reality there and they really don't focus on any of that. So look for some industry specific materials on their websites, or content or articles and things like that, that really evidence and show that they really do work in this field. They know nonprofits, they know your funding sources, they know the challenges that you deal with, because those are the types of audit firms that you really want to work with. They can be value adds, they can help support you, and they can give you the smart and thorough audits that you really want. You can also ask your funding sources directly. I know some of them keep small lists of firms that they know are qualified, that they work with regularly, that they like to see reports from, and that's very important. If you're in a highly regulated subsector of the nonprofit world, you want to make sure you're keeping your funding sources happy. You don't necessarily want to use a firm that they've never heard of or that they don't really trust and rely on, because that just means that that funding source may apply more scrutiny to you. Some funding sources, if they get audit reports from certain firms, they know that the information they're getting is good. They don't have to really scrutinize it and look at it with as great a microscope as they would otherwise. So once you've identified who the firms are and how many, you want to identify a point of contact within the organization. Like I said earlier, it's usually someone within management, probably a CFO or controller type person. If you have a pretty heavy finance department, it may be someone different than those two. If you have a finance director, something like that. Still, it tends to be someone internal because they have the bandwidth to do it. Audit committee members sometimes take this on, and God bless them, but they have day jobs usually, and trying to juggle these responses and these different audit firms' questions and interviews and things like that, it can be a bit burdensome. But this point of contact wants to supply information to bidders, like Ken said, make sure that they're sending information out with the RFP so they're not getting that question back. Include the financial statements, the 990s, the cost reports, anything else that's useful, management letters, past journal entries, so that the auditors really have a lot that they can look at and come up with smart questions. So dealing with those questions is important too. Something that we think is not used often enough is maybe a window of time where questions can be gathered or submitted to your organization, and then all of the answers can be sent out to all of the bidders all at once. That can avoid you having to talk to 5 different firms about the same things. Just accumulate those questions, put together a document, and push it out to everybody. So everyone's working on an equal playing field. They all have the same information when they're putting together their bids and quotes. That's something when we see that, it's kind of welcomed. It's smart. It saves us time. It saves you time. And it makes sure that if we did miss a question, we're seeing it that someone else may have asked, and that's good. You also want to coordinate interviews, that point of contact with the firms that are selected, and obviously ask your own questions. You want to have interviews with the audit firms. You want to make sure that you're getting what you want out of them. Chances are you want to get a feel for their personality. That doesn't come across well in a written proposal. You really want to talk to people and see their faces, see how they interact, see what their personality is like, because you're going to be working with those people, and you can get a generally good sense pretty early on if you connect with somebody and if you can see yourselves working with them over the audit period and beyond.
One of the things that Matt was talking about, identifying potential firms, the other thing you can do is you can ask other people within your industry who they're using, so that you can kind of get a feel for that. And you can also go to any trade associations that you belong to and see if there's any recommendations from the trade associations in terms of who's active within those trade associations. Because if you have a firm that's active within a trade association, there's a good chance they really understand the industry that you're in. Again, as Matt mentioned, auditors should be a resource that you can kind of bounce questions off of. So kind of keep that in mind when you're going through the audit process. It's not just, a coming in, doing an audit and leaving, you really want to find someone who you can partner with on a year-round basis. They should really have knowledge of your industry and your funding sources. They should be able to go beyond the numbers and provide insight and value. So there should be a value add to the relationship that exists. And they should provide your organization with a constant flow of information and guidance. So if, again, as Matt mentioned, if you're not working with someone who really understands your industry and understands the funding sources, the specific funding sources you have, then they're really not going to be a really high level value to your organization. So again, as you're going through the process, make sure that the auditors have that industry experience within your funding sources, so that you can ask them specific questions and they understand what you're talking about. They understand. Again, if you're dealing in the SED world, or the OPWD world, or the OASIS world, you want to make sure that your auditors understand the regulations, changing in regulations, how billing works and funding works and everything else. If you're an organization that relies heavily upon donations, and you have endowments and you have restricted donations, how well does your auditor understand investment policies, MIFA, and rules and regulations regarding restricted donations? If you have government regulators, and maybe there's uniform guidance audits, how often does so how many uniform guidance audits does the firm do? Do they understand what a uniform guidance audit is? If you have pension and retirement plans, there are some audit firms that really don't go heavily into pension and retirement plans. Cost reports, how well do they know the cost reports? So if you have a CFR or a A8CF1, do they do a lot of these? Do they prepare them? How many of them are they involved in? We talked about restrictions on contributions to net assets, but that is a big area for some nonprofits, even like a private school or something, who may be bringing in a lot of endowments for capital expansion, or a lot of, donations for capital expansion stuff. Do they understand, does the firm understand how all of that stuff works? If there are specific reporting rules or supplemental schedules that are needed within your audit report, or special purpose reports, do the auditors understand what those reports are, and can they prepare them for you? How well do they know new accounting rules? There's new accounting rules coming down on a regular basis within the nonprofit sector. There's a new rule that just came out regarding in-kind donations. So again, are they keeping you abreast of what these new accounting rules are? Because again, the firms that you work with should be a resource to you and should be able to help you through that stuff. If there's any special tax issues that you're dealing with, we get questions all the time regarding unrelated business income tax, or maybe multi-state filings, or what's considered a prohibitive transaction. Again, you want to be able to bounce things off your audit firm. And then, on top of that, then there's also the approach to the audit. What's the approach that the audit firm is going to take? We kind of like to take a holistic approach to an audit, where we're looking at things from a fiscal, operational, and compliance perspective. And if you see here from an industry, experience perspective, all of those are going to be important. Are they able to kind of talk about the numbers, but then also understand the business that we're in and how we do business, and what are the compliance requirements, and making sure that we're meeting all of those compliance requirements so that we don't get ourselves into trouble. I mean, part of the purpose of a audit firm is to really, again, be a resource to the organizations that they're working with.
So staffing patterns of auditors are essential, I think. Your audit firm is really only as good as the people that you're working with and dealing with on a daily basis. So as I mentioned earlier, you can be working with the biggest, greatest audit firm in the world, the most successful, but if you're not working with the right people within that firm, you're going to have a bad experience. So what we like to say is that you really need to get to know your team as part of the RFP process. So who's assigned to the audit? Most RFPs ask for bios on all the different people that will be working on the audit, but you really should get a chance to speak with them. Certainly the partner, what type of depth is there? Who's beneath the partner on the account is usually, there's a lot of hierarchy in accounting firms. It goes staff, senior, supervisor, manager, senior manager, partner. There's so many different levels that you really need to understand who it is on there. But beneath the partner, who's the manager, who are the seniors, what's their experience like, how do they interact? Talk to them, ask them questions, challenge them. The partners are well versed in this stuff. We're out selling all the time, but the staff and the managers and the seniors maybe not so much. But they're the ones that you're going to be working with more than any. Who are the multiple contacts that you'll have? How responsive are they? Do they get back to you right away, or do they wait? The initial communications you have with the auditors will be indicative of how it will be down the line too. If someone's very on top of the information that they're sending to you back and forth, they're very responsive, they're very timely, they seem interested in your work, that's probably indicative of how they'll be when they're at your actual auditors. If you send RFPs out and you don't get quick responses, if people are delaying, if it's impersonal, that's probably a mark of the firm and how they tend to operate. But who's doing what and when is really important. And that gets into the second one, the partner level involvement and roles. Partners have been doing this forever. Ken's been doing this for, I don't know, 30 something years. I've been doing this almost 20 years now. We bring a level of experience and knowledge, just like our other partners do within the firm, that the younger level staff just can't. They don't have it yet. They're not as seasoned. So it's important that partners be involved in the actual account. All too often we hear and we pick up clients who say that, you know, they met the partners and they were sold a bill of goods during the RFP process because they never talked to the partners ever again. And the partners clearly don't really know your account. They don't know your organization. They're not being helpful. They're not reviewing the staff work papers, and they're just showing up once a year to shake hands and take people out to lunch back when you could have lunch with people. So it's different. We try to do things differently. We recommend that everybody work with firms, whether it's us or someone else, that really has partners involved with the day-to-day. Make sure the partners know what's going on with your organization, because they're the ones that you can lean on when you need them. They're the ones who have the most experience. They're the ones who can tap into their networks and make sure you're getting the information that you need. They're also the ones that keep the audit running smoothly. So, you know, Ken and I were probably 50 to 60% working on clients now, and the rest is stuff like this and running the firm. That's a pretty high number of working on actual clients. And we like it that way because we want to feel connected. We want to know what's going on, and we want to bring that value when we can.
One other thing, Matt, I mean, also, when does your partner get involved in the process? I mean, are they getting involved back in the office? Or are they actually showing up in the field when we could do audits in the field to review work papers? Because the more the work gets done in the field, the less questions and the less the audit gets dragged on. Sorry, Matt, go ahead.
Yeah, and then that goes into the next one, the manager level too. So a manager, typically for an accounting firm, probably between 5 and 10 years experience, they bring a lot to the table. They've seen a lot, they've done a lot of original work, and they'll be coordinating the seniors and the staff that are doing the work. So they, again, want to be heavily involved. You want to make sure you know who those people are. You want to make sure that you jive well with them. You want to make sure that they're actively involved with reviewing work papers, like Ken said, maybe even doing some original work. You know, we're not above here at Cerini rolling our sleeves up and doing original work as if we're staff or seniors. We do it all the time. It's kind of interesting to do to keep us grounded and connected to the clients and what's going on. So those are the types of questions you want to really drill down into. You know, ask the partners who are bidding on you, how often will I see you? What will you be doing? What will the managers be doing? How often will I see them? Will they be performing original work? And then you really get to the heart of how the audit will run. It's a tough business that we operate in. It tends to be a lot of hours. The pay is decent, but it's not the greatest in the world. So there's a lot of turnover in public accounting. We've been good because we try to treat people like people, but that's not really the hallmark of our industry. It tends to be a churn and burn type model where people, if they can't hack it after a couple of years, they leave. So you don't want to be caught up with a firm that has that constant turnover, because if they're turning over, that means the people that you're dealing with are turning over too. And that becomes a re-education process for you, for them. If not properly supervised and managed, it'll create more work and heartache and headache and frustration on your side of the table. So you want to ask about turnover too. How consistent will the staffing be, and what happens if someone on the team leaves? You want to make sure that the audit team being assigned to you is deep, because there are things that happen and people do leave. It just happens. So if your audit bench is 1 or 2 people deep, that's not good. You want to make sure there's a few people, 3 or 4 or 5, that are working on your account that know you well, so that if something happens with the staffing pattern, that it can be smoothed over without really affecting you and your organization. Because audits, you know, they take us time to perform them, but we respect and realize that it takes you a lot of time to deal with us. And it's not a pleasant experience. Even if we're the best auditors in the world, it's still an audit. It's not necessarily a fun thing to deal with. So you don't want to be training new people on your account while you're dealing with that frustration too.
That's why it's also important, as Matt mentioned, for the partner and management involvement, because the more partner and management involvement, even if there is some level of turnover, the partner and the manager have a really strong understanding of the audit engagement, they understand you, so the staff don't have to run back to you, and you don't have to retrain the staff. That's really the role of the rest of the team, the upper level management. The other thing that you could, or you should be kind of considering as part of this whole staffing pattern is if there are tech reviews or if there are quality control reviews, where do those take place? How quickly do those take place? Because most firms now have a technical review process or a quality control process in place. And some of the larger firms require that to be going up to like a national level or something like that. And it could take, as Matt mentioned earlier, it could take weeks for that to happen. So you could get everything done, you could have everything lined up, and then it goes up to some sort of national spot. It kind of falls into this black hole for a little while. And then ultimately when the report comes back, there are questions. So again, by understanding what the process is for that technical review and quality control review, it can kind of help set the tone for the timing and everything of the audit.
I'll give an example of that quick, Ken. We got an RFP several months ago for December 31st, 2020 audit. We just got this week copies of the December 31st, 2019 audit that was issued March something 2021, because it was at one of those firms where they have this centralized reviewing department that's disconnected from the actual engagement, and they sat on it for months. So we're presenting to them 2 days from now to try to work on the 2020 audit. Here it is, April. All delay is caused by the auditors and the way that they function and they review things. So you want to ask questions like that to make sure that doesn't happen to you when you select an auditor.
And look, we understand that, and it's right here on the slide, we understand that COVID-19 has gotten in the way of a lot of stuff. And it's caused delays, and it's caused a different way of approaching an audit and everything else. But still, as Matt said, that's kind of a long period of time. And speaking of COVID-19, obviously the pandemic has taught us a lot of things. One of the things it taught us is we need to be flexible. We need to be able to access information from anywhere, and that technology is going to be an important component of everything we do. So, you want to also make sure that when you're working with an audit firm, that audit firm is highly versed in technology. They've got electronic work papers. They can communicate with you and do things through things like Adobe Sign or DocuSign. They have file sharing capabilities, either through Dropbox or Share File or something along those lines. That there's proper security in place. Everybody's concerned about HIPAA and FERPA requirements. You want to make sure that there's proper protections in place, and that if you do have to worry about working remotely, and obviously in today's environment we're still working more remotely than we're not, that they have the ability to work remotely, and that it can continue to be somewhat of a smooth process. I know that the working remotely has kind of stretched out some of the audits that are out there, but again, you want to kind of work with a firm that kind of can develop a kind of a nice pattern with you, or a nice rhythm with you in terms of that audit process, even in a remote working environment.
Demeanor is important. I keep stressing the personality and the connection that you have to have with your auditors on certain levels. We see communications methods for findings. So we issue management letters as a result of our audits. Everyone has to. A management letter is a fancy way of saying it's a findings report. So the management letter can either be innocuous and have nothing and just say we have no findings, we have no material weaknesses or significant deficiencies, or auditors can ascribe those scary labels to some of their findings. So what we try to do and what we try to stress to our clients is that that's a written document that funding sources are now starting to ask for. They're getting smarter, and they realize that these management letters are out there, and they want to see what the organizations that they're funding are doing and if they have any issues. So we as a firm have taken a stance, and we have for maybe a decade now, that we don't want anything in that written letter unless it absolutely has to be, unless it's really severe. So a question you might want to ask the bidders is, how do you handle findings? How do you handle minor issues that might come up during the audit? Do you tell us as the organization verbally or through some other means, or does it have to go in that written management letter? Because we do see from time to time very small immaterial comments in management letters. And what it does is it opens cans of worms, and funding sources ask, why is there a depreciation issue for $500, which isn't a big deal at all? But it sparks concern in the minds of people that don't really know any better. So you want to make sure that you're understanding how these findings are getting communicated, if there are any, What types of other reports do the auditors provide? Do they provide graphical board presentations? Do they just throw a lot in that management letter? Are they reasonable people to deal with when the auditors do find issues? How do they communicate that to you? Do they present it to you all at once at the end? Or they kind of bring you into the loop as it's happening so you have a chance to respond and really look into the issue? So all of this is important. You don't want an auditor that just kind of sits afar from you, comes up with issues and findings and beats you over the head with them in the end. You want to have a collaborative relationship both ways. If they have serious issues, they should be able to bring those to your attention and talk to you about them. Maybe they misunderstood something and it's not as severe as they think, or maybe it's a real issue and they can help you through that then, instead of being that bludgeon in the end and just saying, here, you guys did all this wrong, deal with it, we're moving on, we're auditors and we're working on another client now. You don't want that. Flexibility is important. So our profession there's a lot of judgment that comes into play in our profession in terms of labeling things, in terms of how we test, in terms of what we audit, what's severe, what's not, and how we deal with things. So you want to work with a firm that is that more collaborative feel to it, instead of one that is kind of just standing behind the wall and hitting you with comments and information without having it be a two-way street. Responsiveness, I mentioned earlier, returned emails, returned calls. We as a firm, we tell our staff, you have to get back to people within 24 hours. A lot of us are obsessive with our phones and responding at all hours whenever we get them. We just try to be that way. That's something that we think is important. An audit, it doesn't really happen in a vacuum. So there are periods of time where, it goes silent and you have to try to keep your heads down and get through the work. But really, there's no reason to not be responsive to emails and calls, mostly emails these days with clients, making sure that we're talking and we understand where we are in terms of the progress of the audit, that you understand where you are in terms of the progress of the audit, how the deadlines are looking, how the deliverables are looking, and when everything will come together in the end. And then personality, again, interpretation of independence rules, friendliness, and handling of disagreements. So independence requires that we not make certain management decisions and we not cross certain lines as your auditors, because then we're, in a sense, auditing our own work and we're impaired from doing that. We're not allowed to do that. But there's a lot that we can still do while being independent. We can't make decisions, but we can inform you, we can help you, we can answer questions. We get asked questions throughout the course of the year from a lot of our audit clients, and we encourage them to do that so that we stay connected, we know what's going on with you, and that so you're well informed and making sure that you're keeping the books up to date and you're not missing anything. There's constantly accounting rules changes, there's constantly funding source changes that your audit firm should be making you aware of. If they're not, through web postings or blogs or email blasts and things like that, reaching out to you directly and telling you, hey, this is something that we know affects you. We can help you with this. You also want to understand if there's extra billings, we'll get into that later, if the clock is starting, so to speak, when you are asking these questions and when auditors are helping you with non-audit type situations.
One of the things that, based on the last couple slides that we've been talking about, is, there's a lot of information here, and you can have that conversation, that interview with the audit firm that you're potentially going to use. But the other thing is, it's important also to get the references from the audit firms, and then check out the references, get a list of other clients that they work with, so that if you know somebody within those clients, you can reach out to them and ask them, ask some of the questions that are here. How responsive are they? How flexible? How knowledgeable? What sort of information do they provide? So I think you can learn a lot from kind of reaching out and talking to other people that the audit firms are working with. And again, the next part is like value adds. Does the audit firm provide value to the relationship? So will they be a resource to you? We've talked about this a lot. Do they follow your industry so they can answer questions as they come up? Can they discuss with you fundraising and compliance related issues that you may have? I mean, we had one of our clients reach out to us who've never really done fundraising before, and we actually did a board training for them on fundraising. That's not what we do, but because we work with so many clients, we kind of help them in any way we can. Do they disseminate information to the field through newsletters, blog postings, as Matt mentioned, seminars, all that type of stuff? The more information that they're sharing with you, the more information they provide, the better off you're going to be. We've had clients that through all this CARES Act funding weren't really aware that HHS funding was available for healthcare providers. We helped them get HHS funding. We helped them get ERTC funding. that's money for the organization that they wouldn't have had if not for the relationship. So again, it's what can they bring to the table? What additional resources and capabilities do they have beyond the traditional accounting services? If complex stuff comes up, can you call them? Can you reach out to them? Is a clock going to be running, and are you going to be paying for it? Do they provide accounting updates because standards and rules are changing on a regular basis? Do they provide information about regulatory or governmental changes that are happening within the industry? Can they connect you to other people? So if you're looking for maybe a new brokerage firm or new lawyers or insurance people or payroll or IT, do they have the ability to connect you with other people who are like-minded, who have a strong understanding of the nonprofit sector? And again, as Matt mentioned, we've mentioned, are they available throughout the year to answer questions?
We're getting slowly towards the end here where you want to actually choose the auditor and pull the trigger and decide how you're going to do that. Fees are very important, obviously. They're not solely important, we would argue, but they are important. We realize that nonprofits tend to be an underfunded sector of the economy. They do a lot with very little in terms of administrative dollars and things like that. So fees are important. So you want to ask about multi-year commitments. It's something we're seeing more and more of in RFPs. What a multi-year commitment does, it tends to lock the audit rate in for a few years. So you say, assuming consistent operations audit firm, how much will you charge us for year 1, 2, and 3? And what can we expect for annual increases thereafter? What you avoid there is from the sales pitch of they underbid for year 1, they win your business, and then they jack the fee up in year 2. The profession is not above doing that. We see that. So you want to make sure that you're understanding the annual increases. What are they typically? Are they just the typical cost of living, 2 or 3%, which is normal? Or are they something more significant and more meaningful that you have to budget for and really have to deal with? A very important one here, though, is this budget overruns, this third flag. So we as auditors, we track our time obsessively. We're like lawyers, except we typically have fixed fees, which is a little bit different. We don't just bill you by the hour because your audit fees would be a lot higher, and the industry just doesn't seem to support that. But when tracking our budgets, we look for situations where, let's say the information that we've gotten as part of the RFP process wasn't entirely accurate, or the client wasn't completely ready, or there were really bad situations that happened that were out of our control. In extremely rare situations, we as a firm may ask for more money. And I say may, and I say ask. Other firms, they don't necessarily treat it that way. You may get surprise bills for firms for so-called budget overruns, which may or may not have been your fault, you're doing, and you may have had no idea this was even happening or possible. So you want to make sure you're asking upfront with these audit firms, whoever's bidding, how do you handle budget overruns? What if you spend more time on our engagement than you anticipated? Should we expect an extra bill for that? How often do you do that? Or is it, like with us, very rare that we have to do that, only in very special circumstances when we're basically losing money on a job? But again, keep that in mind. That's something that's out there. If you see a very low bid, a very low fee, you want to ask the next questions of, okay, is this real? What are the increases going to be? What do we do if there's a budget overrun, something like that? Special requests, like Ken said, and I've been saying the whole time, we like to stay connected during the course of the year. It helps us, it helps you. Do you have to pay for that with whatever audit firms you're flirting with and trying to do business with? So in this situation, if you have questions about accounting issues, will you be charged for that? If there's special projects that come into play that will take hours of time, how does that get billed? Is there a fee arrangement up front, or is that something that gets talked about? So that's important to note. Again, a distinction between accountants and lawyers. Lawyers tend to bill by the hour based on time spent. Accountants sometimes try to do that, oftentimes don't. We as a firm, what we do is we typically just throw in the additional support unless it becomes a major project, and then we'll come up with some sort of fee and move forward that way. But if someone's going to call us and ask us questions a half hour every couple of weeks, it's not a big deal to help them and just keep that as part of the fee. So you want to make sure you understand how that happens. The whole key here, this whole bullet, is to avoid surprise bills. You're budget conscious, you're hiring a firm based on a proposed fee that you're expecting to be pretty steady and fixed. You don't want that number changing on you. And if it is, you want to know exactly why, and you want to be able to anticipate that. Communication style is also important. Board presentation format. So at the conclusion of audits now, for pretty much all of our clients, we're having board presentations or audit committee presentations or both, where we're presenting our findings during the course of the audit and some of the financial results to the governing bodies of the organizations that we audited. What format does that take place? What style is that? Is it very dry? Is it reading black and white off the audit report, or is there something a little bit more spiced up that may grab the attention of the board members or the audit committee members, most of whom are not financially well versed when it comes to nonprofit accounting? So we again try to just make things reasonable and understandable, and you want to make sure that that's the message that you're getting from whatever audit firm you work with, is that it's a clear presentation. It's as interesting as accounting and finance can be. Let's face the reality here, it is kind of boring for people, but is it spruced up a bit so that it keeps their attention? And what type of exit meetings are there with management, if any? So you want to make sure that you're well informed about the audit. You don't want any surprises. You're trying to avoid surprises here, whether it's dollars or findings or anything. So you want to make sure that the audit firm is constantly meeting with you, keeping you up to speed and up to date on what's going on. And if there's an exit meeting that you'd like to talk with them once they're wrapping up, that's something you should bring up during the RFP process and make sure that they're on the same page with you in terms of that.
Next, we'll talk a little bit about peer review and audit quality. Audit firms, just like when we come in and we audit you as an organization, we get audited every 3 years. So that's called a peer review. We have another accounting firm who's independent of us coming in and looking at the work that we perform to make sure that we're doing things appropriately. And then they issue a peer review report that basically says that we're in compliance with accounting rules and regulations and auditing standards. So you always want to get a copy of that peer review report to take a look at it and make sure that the report is a clean report. You're looking for things like material weaknesses or deficiencies in the quality of the audits that are being performed. If there are any findings or a modified opinion. So those are the types of things that you're kind of looking at, because you want to make sure that the firm that's doing the work for you is a quality firm. Again, lowest price, as we've been saying, isn't always the best answer. You want to make sure that you look at the whole value proposition that's kind of brought to the table. You also want to make sure, again, from a quality control standard and everything else, do your due diligence. Go look into some of these firms. Do they have lawsuits against them? Are there issues with government sanctions or any of those types of things? A lot of that stuff could be found online, or you can ask questions as part of the audit process. And as I said earlier, check the references. Ask about lost clients and find out why the audit firm has lost certain clients. Get an understanding of the size and types of the references that are being provided, and are they consistent and similar to your organization. Ask the references about the organization's or the accounting firm's expertise. What sort of industry involvement does the accounting firm have? Something that you can kind of ask as part of your RFP. Do they belong to any trade association groups? Do they belong to membership organizations? It's important to understand what groups and membership organizations they belong to, because again, you want to see that they're staying abreast of your industry and what's happening within your organization.
We have a poll here. So now that you've accumulated all this information, you need to pick an auditor. So how do we do that? So we'd like to ask, what's the most important factor for you in selecting an auditor? Be curious or interested to see what these responses are here. So we'll give it a few seconds. Obviously, it's not always about price. It shouldn't always be about price. Our perspective as bidders all the time is that price is very important. And I think sometimes it overshadows some of the value adds that can come with working with firms that are a bit better for you, but may cost a little bit more money, not necessarily a ton. The industry reputation, obviously important. Experience going along with that is important. And then, as I mentioned, the partner management team, accessibility, involvement. So let's see what the results are here. Experience. So that I'm glad to see that. And I'd like to see that bear out more in the field, because frankly, there are lots of very low cost providers out there of anything. Accounting is no different than any other service or even products that you buy. You can always get something cheaper somewhere else, but it's a matter of if that's a good fit for you and if that's quality. We tend to avoid organizations that are so cost sensitive, because they're not really looking for what it is we provide. They don't value the experience. They don't value the connections, the timeliness, the responsiveness. They just want the cheapest possible. And we respect that. That's fine. That works for them. But there's firms for them. So when you're going out and doing this RFP and you're developing a scorecard, which is what we're talking about here, you want to weight things that are in the proposal. Price is clearly important. Experience is apparently the most important to everybody here. The staffing, the name, there is a certain value with big names or names that are well understood and respected in an industry and things like that. So that's important to do. Interviewing, I think, is very important. You want to make sure that you as an audit committee or even management, you want to be talking to the people that are bidding. You don't want to just base a decision on a proposal written in black and white with no context to who's preparing that proposal, who you'd have to deal with as part of the audit. So you want to make sure you're interviewing a couple of firms. Typically, if you start out sending, let's say, 5 RFPs, you want to whittle the interview list down to 2 or 3, go through those interviews, ask smart questions, get a feel for the firms, and then base a decision off of that. Try to really drill into who's doing what, talk to the whole team, ask them some questions, engage their personality there. Assess all those factors after the interviews, come up with a vote. The audit committee, you should keep in mind throughout this, whatever the audit committee is doing, you want to document it very thoroughly in the meeting minutes for these audit committee or finance committee or even board meeting minutes. So that's well documented that you took the time to go through this process. It was a thoroughly vetted process that resulted in XYZ CPA being chosen as your new auditors. You want to inform the bidders. Bidder frustration here is sometimes we bid and we never hear back. So we would expect the same level of respect that we're giving you in preparing a proposal, because it does take quite some time. It's a couple-hour process, if not more, and there's a lot of thought that goes into it. I think at a minimum, an email or a letter going out saying, we're not using you, please move on. Something like that would be appreciated. And obviously, if you're choosing the firm, you want to tell them as quickly as possible, because the process for succession does take some time. It does really necessitate cooperation from the prior auditors, which is not always there, unfortunately. Sour grapes do come into play sometimes. Some CPA firms charge clients that terminate their engagements. They charge for a transition fee. In reality, it probably takes an old firm a couple of hours to transition to a new firm to give them access to work papers and documents and things like that. But it's sort of a poison pill. $1,000 to $3,000 is what we've seen as being typical. We don't charge anything. We don't think that's right or ethical, but it's out there. So be aware that if you are going out to bid, you might have to pay a little bit to the old auditors before you're able to replace them. But there is a process there. There's standard letters that have to be issued by you, the organization, to the CPA firm that you're replacing. The new CPA firm then has to reach out to the old CPA firm, and all of that takes time. So again, it's really re-emphasizing why you need to start this process a couple of months, if not longer, before your year end, to make sure that by the time all this nonsense is done, you can start your new audit. Succession will have taken place. All of the people have been informed the way they have to, and you can move on in a productive manner going forward.
So once the process is done, then you would get an engagement letter from your auditor, whether it's your existing auditor or a new auditor. Within that engagement letter, a lot of the wording that's in an engagement letter is boilerplate wording. So kind of keep that in mind, but it spells out the different management responsibilities, what management is responsible for doing, and that, it's management's responsibility to design and implement internal controls. It's management's responsibility to provide the auditors with access to information, to take responsibility for non-attest services, on and on and on. What are the auditor's responsibilities? What are the fees that are going to be charged, and what services are going to be provided? And then the timing and deliverables that are in play. So again, it's a pretty much a standard letter. Pretty much every firm is going to use something fairly similar, because a lot of the wording that's kind of built into an engagement letter is industry provided.
We have a poll here we'll do quickly. So as part of working with your auditors, you have new auditors now or existing auditors, there is an obligation for the audit committee to meet with those auditors. So interested to see here if it's before, after, or neither. There are certain legal requirements here too, but as part of these meetings, you want to discuss prior year results from the audit. You want to discuss any changes that have taken place. We can close the poll now and look at that. You want to talk about any external changes that have affected your organization, any new regulations, any organization audits from the outside world, regulators, things like that, any frauds or litigation. You want to make your auditors aware of this as you're doing that. And obviously, if there's any accounting changes, any new rules, revenue recognition is a big one now. Ken mentioned the new donations in kind rules that are out there. We'd want to make you aware of that, and you'd want to tell us how you're responding to that before and after the audit. So that's really the right answer. That's the best answer. Never, should not happen. If you have an audit committee, they should be meeting with the auditors before to go over these things, the prior results and the changes in the current year, and definitely after the audit to get the results of the current year audit. And then, flipping back to the slide here, the findings, that's important to discuss. Prior year findings you want to talk about before the audit, and you as the organization want to let the auditors know we've addressed this or we haven't and why. If there's any other issues that you have, you want to make the auditors aware of that too in these pre-meetings.
The other thing that comes into play is in terms of the after the audit is over, what does that review process look like with the auditors? And again, I want to throw up a quick poll here also. So how much time does your audit committee typically spend with your auditors during the post-audit meeting? Is it a 20-minute, less than 20-minute process? Is it 20 to 40 minutes, 40 minutes to an hour, or over an hour? So just really quick. And what the auditors are going to be going through during that process is they're going to be looking at the financial statements and some sort of financial analysis. Again, we typically don't go line by line through a financial statement. We put together a trend analysis so that the board can really gain, or audit committee can gain, an understanding of some of the trends that are happening in the information in the organization. And those trends look at fiscal stuff, but they also look at some of the operational trends too. So the majority is 40 minutes to an hour. That's a good time. We typically like to see 30 minutes to an hour would be a good understanding of, or provide good time. If it's with a board, you typically have a shorter period of time. If it's with the audit committee, it's usually a longer period of time for the meeting. I've actually had meetings that have lasted several hours with audit committees, and we've gone through a lot of detail and a lot of deep dive into the organization. So again, it really comes down to what the organization's looking for. Part of the audit meeting also covers certain required communication. That's the SAS 114 letter, and there's a whole lot of information that's required there. I'm not going to go through it in the interest of time. If there is a management letter, what findings that were there. If there's a uniform guidance audit, what are the uniform guidance findings and what is the report showing? If there's tax filings, you can go through the 990, because remember, the board is responsible for reviewing the 990. If there are cost reports, we often go through some of the information that's included in the cost report as part of the presentation. And then if you have a pension audit or retirement plan audit, you should be going through that too. That's one of the things that we often see, that there's a separate audit of a pension plan, but there doesn't seem to be any communication with the audit committee or the board with the auditors with respect to that pension plan or retirement plan.
And then finally, the board interactions. Ken pretty much talked about this. The summary of the audit and tax work sometimes will present 990s. And really, there's a question on the 990, does the board review this before it gets issued? So that satisfies that. Summary of any findings or issues, material weaknesses, things like that. And then ultimately, these meetings tend to end with a recommendation by the audit committee to have this voted on, approved, and then we can finalize everything. So there's some quirks here too, and it's different for every organization, and it's how it's written into your charter. Who can vote to ultimately approve the financial statements? It seems most have it at the board level, where the audit committee would recommend to the board that they approve the final financial statements for issuance. But that can be different for everybody. It's something to keep in mind as you're going through this process too.
Okay, so we're sorry we went a little over on this. If anybody has any questions, feel free to reach out to us. We're more than happy to answer. We do have our third installment of this, where Matt and Tanya will be discussing internal communication and understanding risk. That's going to take place on May 5th. And again, for everybody who's attended, we will be sending a copy of the PowerPoint as well as the presentation out to you, so that you have it and you can share it with your audit committees or other people within your organization. So we thank you very much for your attendance. We thank you for participating. We're sorry we went over a couple minutes, but hopefully you found this useful. Take care, everyone. Thanks.
Bye, everybody.